we're going to shift gears, and we have always rounded out the final day of our symposium with an industry spotlight. And what I love about these is that we're able to take some of the information that we're seeing in the media subscriptions world and apply them to different industries. In this case, one would say we've saved the best for last. We get to focus on the wine industry. And so what we're going to take a look at is how news media and wine, they're not actually all that different. So at this point, what I want to do is introduce to you former publisher and CEO of the Dallas Morning News, now currently the founder and proprietor of 6 Mile Bridge Wines. So with that, I'll let you take it away. Welcome, Jim Moroney.
Thank you, Nikki. I sure appreciate it. What I want to talk today about is the sort of similarity between what we were doing at the Dallas Morning News and what all of you all have been doing and talking about today, your subscriptions, both print and especially digital, and what that does for the person like me in the wine business. To start with, I assume that a lot of people, a lot of you on this Zoom call have gone to a wine tasting somewhere, and you've probably gone to two kinds of wineries. One, a really big winery where you can buy their wine there, but you also can find it in liquor stores. You can find it in grocery stores. And then you go to the smaller boutique wineries, wineries that you can buy it there, but if you don't buy it there, you're going to have to either go to their website or join their club. You're not going to find their wine in the liquor stores and in the grocery stores. And I'm going to focus on that segment because they are, like your subscribers, a DTC business. They're a direct-to-consumer business. The bigger wineries, a lot of them don't know so many of their customers because they work through distributors, and the distributors sell to the end retailer, who then, of course, sells to the customer directly. Whereas you have both print and digital subscribers who you sell directly to and who you know, and the wineries that are small like ours, we sell directly to people through online and in the tasting room. So let's think about it a moment. You have a print subscriber and you know their name and their address, and that tells you a lot about who that person is. You also have digital subscribers, and besides getting their email address, you know what they're consuming and when they're consuming and how often they're coming back to the site and all that good information. And it helps really round out who your customer is and lets you target them and try to retain them, keep them from churning and so forth. So you take a winery, a small one, and most of them have clubs, wine clubs. You may be a member of several wine clubs. And those wine clubs are sort of like, those wine club members are sort of like your subscribers. We start off with them, let's say, coming to the tasting room, and they try some of our wine and they buy some. Some of them decide that they don't want to take it with them back on a plane, so they leave it to us and we will ship it to them. And now we've got their name and their address, and we also, of course, have their email to correspond with them. Another opportunity comes when wine clubs release their wine 2, 3, maybe more times a year, and the club members not only purchase wine so that the wineries know what kind of wine they're purchasing and how much of each SKU, each different wine they're buying, but again, because they're shipping it to them, they have their name and their physical address. All of that information can then come together to help you know and learn about who your direct customers are. So having had an opportunity to work at the Dallas Morning News and work with MATHER and see what great work they did at helping us price both our digital and print subscriptions, I got into this business and said, there are these similarities, and maybe MATHER could help me with what I'm doing. So a couple of years ago, I talked to Matt, and they were indeed already a little bit engaged in the wine industry, and I offered to connect them with a couple of wineries in the Paso Robles area where we are until I could get enough data to start working with them. Well, that did come to pass, and I want to talk to you today about just one particular aspect of what we do with Mather, and that is something that all of you do. That is discussing the relationship between price and volume, or if you will, the elasticity of your pricing for your product. We release wine once a year in September. People, our members, can then buy that wine online. For the next, roughly 11 and a half months, we need to have a sufficient amount of wine to both pour and to sell in the tasting room until we get around to September of the following year, and we release the next vintage. Right now, we're on into our second vintage, our 2017 vintage. And in about January of this year, we realized that this wine, our wine, most all of them, frankly, were selling faster than we had anticipated. And that might not seem like a problem to somebody, but when we don't want to release the 2018 wines until September of this year, and they're beginning to sell out prior to August, we could find ourselves with a predicament. Either we have to open the 2018 wines earlier than we want, and we don't want to do that because they show better in the tasting room, particularly with more age on them, more age in the bottle, or we close down the tasting room, which we also don't want to do because it's our primary channel for acquiring customers, new customers. So I said to Matt and to Nathan at Mather, I said, all right, why don't you take one of our SKUs, in fact, take our Cabernet Sauvignon, and it was selling out at the fastest rate, and tell me what would happen if I raised the price, but not over $100. I was a little concerned about raising it above $100 because we're a new winery. We're only at our second vintage. And, that's I guess, just maybe a perceived barrier for some people in terms of their wine spending. So what we did is we asked them to do this, and they did. And as you can, if I'll orient you here for a moment, you'll see our 2017 Cabernet Sauvignon is the darker blue line. And it shows you that you'll see a number 35.9%. That means that on the 22nd week of our fiscal year, September to September, the 22nd week, which would be about the last week of January, we had 36% of our inventory remaining, and I wanted to get it all the way out to 52 weeks if I could. What Mather is showing on this chart is that without doing anything, if we leave it at the $80 price, which it currently was at, we would run out of wine somewhere around week 40. Obviously, earlier than we wanted to run out of it. So Mather came back, and we can look on this next slide. And you can see that we were now 4 weeks later, we're in the 26th week. So we're just about the end of February. And they plot for us what's going to happen if we would move the price up by 20%. We would move it from $80 to $96. And if you could tell from the previous chart where we were going to end toward the end of April, we're now going to be ending in about the 44th week, which would be around the end of June. Still not out all the way to 52 weeks, but certainly better than it was before we pushed that out a little bit. And of course, the better part is we've now raised the price $16 or 20%. And as all of you know, just like in the newspaper or online business, that money pretty much goes straight down to the bottom line. So it's a actually pickup in profit and margin for us. So now let's see what actually happens. Next slide. You can see that we actually ran out of wine in the 40th week, 39th or 40th week, which would be put us just about a couple of weeks ago into May. what we did not do correctly was tell Mather that I gave Mather all of our Cabernet inventory to work with, so they had the full amount of inventory so they could create this depletion curve. That's what we've been looking at, is how fast will the wine sell out at different price levels. I forgot to tell them that we hold back 10 cases of wine so that we have a reserve, we have a library wine that we can pour for years down the road. So when they showed that we would run out of wine toward the end of June, and we ended up running out of wine actually in May, the difference were those 10 cases that we held back. So frankly, had I given them the total inventory minus 10 cases, their projection would have been absolutely right on target within maybe just a week of when we actually did run out of wine. Now, you might say, well, why didn't you just go ahead and figure out what the price was going to be to keep it so that you would not deplete all your inventory until the 52nd week, until the end of August? Well, as I mentioned earlier, I had a little threshold problem with above $100, and the price that it would have taken for us to keep the inventory from depleting before the end of August was a 45% increase off the $80 price, or $116. I am confident from my working with Mather that had I had the guts to take the price up from $80 to $116, we would still be pouring our Cabernet Sauvignon 2017 in our tasting room today, instead of running out of it 2 weeks ago. I think the moral of this story is that you need to, first of all, give Mather clean and good data. I failed on that one. Secondly, you should consider exactly what the data is telling you is the answer to what it is I asked them. I wanted to not run out for 52 weeks. I should have just, instead of putting a $100 limit on it, said, what's it going to take? And they would have come back and said $116. And if I would have had the courage of my convictions about Mather, I would have raised that price to $115 to round it off. And as I said, we'd be pouring that wine today. So give Mather good data. Let them bring you back the possible answers or solutions that that data is providing for you. Trust in what the data says, and then be smart in implementing whatever that data is leading you to do. I'm confident, as we did at the Dallas Morning News, and as I'm learning now in the wine industry, the data will lead you to the right answer and get you what you're trying to accomplish based on the data that you have. There are just a couple of other things that I've mentioned, just like what you all do. We can also be looking at who our customers are and where we can find those, perhaps online, and attract them to our site so that we may have an opportunity to sell them wine, or we can attract them to come to our tasting room where we can have them sample our wine. Once we have people who are members of our clubs, we will be looking to Mather to help us understand how to keep them from churning out, just like you do. And we'll actually be looking at Mather for some win backs, so that we go back to those people who have churned out and bring them back into the club. We can do all these things that you all do on a much greater scale with the data we have and with the algorithms that Mather uses. So that's just a little bit of how you can apply what Mather does, not just to the news business, but also to really, I think, any DTC business that's out there can benefit from the algorithms they have and how they apply them to help you improve how you run your business. So I've got a bottle of wine here, but it's like, only 12:30 in Texas. So that's probably a little bit early for a glass, Nikki. So I'm just, you notice it's not uncorked. So that's as close as we're going to get for today's discussion. All right.
Thank you, Tim. Thanks for that presentation. Fantastic. And great to see you again. I got to say, when I first started talking with the Mather folks about helping with the symposium, we were still in the throes of gathering presenters, and little did I know we'd have this reunion opportunity. So great to see you. And hey, congratulations on parlaying your experience at Dallas Morning News into the vineyard world. And I am so grateful that you were able to sort of pick this up and do this pricing analysis for us. So just before we let you go, and before we open that bottle of wine, because I'm sure it's 5 o'clock somewhere, right?
It's got to be.
It's got to be. Just a few questions for you.
Yeah.
So you mentioned, maybe giving clean data, because if the goal was to extend the full 52 weeks, obviously, when you think about pricing and taking something as large as potentially a 45% price increase in the media space, you'd be in a situation where, if you're the media industry, you have to consider stops. You have to consider what you do if it went, badly, potentially. In this space, if you had gone all the way up to where they had recommended, what was really the downside for you? Is there a risk in raising the price too high? And then what if you wanted to take it back down, and just the volatility of pricing in the wine business?
Sure. I think, Nikki, and by the way, it's great to see you. I was so excited when I heard you were going to be the moderator. I think the risk was probably more in my head, because I didn't have enough experience in this business to really know what would happen if I made such a significant increase in the price sort of, overnight. And I think, like probably other people that have been talking today and yesterday and day before, when the other days, taking the price up is important when you have the opportunity and do it well. But taking the price back down is a little bit of a different story. And I was a little concerned, again, without the experience, to say if I took it up to 115 and it actually slowed things down greater than I and Mather had projected, then bringing that price back down starts to feel like discounting. And I'm not a big fan of discounting something, once you've established a price to value ratio with your company. So if I just, again, and this, Nikki, we raised the price of the Dallas Morning News newspaper in 2008 by over 40% overnight. I should have just gone back and said, believe the data and go with it, and then stick with the price. And if I'd been in this industry longer, I would have. I'll know next time to take the price up and leave it there.
Yeah. So one of the things you mentioned in your presentation that's been hit on a couple times by several of our presenters is just this need to have first party data, to be able to have something more than rely on others. And you mentioned for you, it's things like a mailing address, because someone's come into the tasting room and wants their wine mailed to them and their information. How critical in this pricing analysis was it for you to have that first party data to be able to weigh in on this when you did this project with Mather?
Look, you and I talked about it for a long time, and first party data is gold, particularly as you get Apple and others, the cookie sort of goes away. Knowing exactly who your customer is, knowing in the newspaper business today that you have that opportunity to know who your customer is when these larger corporations work through distributors and retailers and really don't have that one-to-one relationship. It's absolutely critical. And so if I was relying on third-party data, I wouldn't have the conviction about what the data was telling me that I do, because I know Mather's working with our data, our first-party data. I think it used to be gold. It's now whatever's better than gold.
All right. Well, last question for you, and I think this is an important one too, because a lot of people have been talking through the 3 days we've had about just the impact from COVID. And yours in a very different business, even though obviously so much of what you've learned has been transferable. Given just the pandemic situation, just curious how it's been impacting you, meaning have you guys had fewer tasting room opportunities, potentially therefore higher online sales? Or, we've all read headlines in terms of just alcohol sales in general being higher. So has this been something you can speak to in terms of sort of pre-COVID and now where we live?
Sure, absolutely. We had the things you read about. We had times when the state, 2 different times when the state closed down tasting rooms completely. And then we had the second tier, which was you could only have tastings out of doors. And of course, during certain parts of time, even in California, the weather isn't always perfect, and that would diminish traffic. And then you just had people that were understandably reluctant to travel anywhere, or reluctant to be in any group of people at all. So the tasting room visitations across the state of California, and including us, went way down. But to your point, people then started looking for opportunities to interact in virtual tastings online. And they look for opportunities to buy your wine outside of the releases because they couldn't come to the tasting room. And all of that, online sales and virtual tastings, went up dramatically. And interestingly now, outside of, COVID's not over, but clearly, the number of people vaccinated and so forth has grown so much in California, like in Texas. We're seeing the online sales drift back to sort of a more normal rate, and we're seeing the traffic to the tasting room go back up to where it had been before.
That's great. Well, you've definitely piqued my interest on a virtual tasting, and I'm going to have to look into that after this is over. But thank you, Jim, for your presentation, for being with us today. And thank you really for all of our speakers. At this point, I'm going to wrap it up by turning it over to Matt Lindsay, who's going to do a quick summary for us and head out. Thanks again.